Okay, we're supposed to be live today. I'm in live now. So I just want to check so that everything is going as planned. Okay, I can see here on my other screen that it's there, it's going live. Okay, right, it seems like the sound is working. If the sound is not working, just make sure that you type your questions, then I'll be able to see the questions, your questions in the screen that is in front of me, right? So the purpose of the session for today, we have, let's see, okay, it seems like I'm looking upside down. Let me try to rotate the screen. Right. Okay, now it's rotated. It's looking okay. All right. Yeah, I have fixed the screen now. The video has been removed. Okay, can you refresh? Because like me Savel. Right. Okay. I think that we are still live. So anyone that comes and join, you can just type in your questions. So I will just continue right now. Right, like I said, the purpose of this live chat is to address some of the questions that I normally get from people, especially on TikTok. I do have a TikTok channel. We speak to a lot of people there. The people sometimes they give us a positive response. So now the purpose of this video, it's a feedback to them. So okay, let's start. Why we're doing this? Remember that Trend Trader channel, it's more of a trading channel, but we get more and more questions from people that want to speak about investing, right? So now we want to address what people need to understand when it comes to investing, right? Most of the content that we give on TikTok or even in the YouTube channel, on TikTok we give a content that is more on investing, but at the beginning of the YouTube channel we're giving content that was more on trading. So we realized that some people they either do not understand trading, or maybe they are not even there yet to start investing, right? Based on the questions that they ask. So for the first 30 minutes of this live session, we're going to try to make it an hour. The first 30 minutes, we just want to address a few things. Then once we've passed 30 minutes, we'll allow people to then type questions in the comment section. Then we'll read those questions and then answer. We'll try to answer all the questions that you see there, right? So first of all, what does it mean to invest? So investing, the simple definition is that you take your money, you put it in the stock market. Hopefully, the activities that happens in the stock market is going to help you to grow your money, right? So now there are things that you need to think about before you go to the stock market to invest. Some people they come with the impression that they think that the stock market is just a place where they can just go and pick up some easy money. Not to say that it's difficult to make money in the stock market, but it is not that easy. Don't come with the thinking that it's a place that you can just pick easy money. Why are we saying that? The people that make money in the stock market, whether they're investors or they're traders, they possess knowledge. They know what is the stock market, they know what is investing, and they play a game that they understand. If you are coming as an outsider, maybe let's say as a beginner investor, you lack that knowledge, you may not be able to succeed in the stock market. We always say that the stock market is like anything that you do in life. You want to go to business, you need to understand bits and pieces of operating a business before the business can succeed. Same thing, you want to invest in the stock market, you need to understand a few things. We are in different social media platforms. We are on Facebook, TikTok, Twitter. We are members of some Facebook groups, specifically the groups that normally cover EasyEquities. We always see questions from people. For example, someone will say, they're interested in investing, but they don't know where to start. You see? So now those people, the best place to start if you are interested in investing, you need to start by acquiring knowledge. Now, we're not okay. If we speak in the context of EasyEquities, EasyEquities has a YouTube channel. The name of that YouTube channel is called EasyEquities. But if you go to the EasyEquities website, right, I don't want to say it's easyequities.com because now it has changed. It's possible that now it's easyequities.io. But if you Google EasyEquities, then you are now on the EasyEquities website. If you browse there, at the top at that menu bar, you will see a tab that's written EasyEquities Academy. So if you go to the EasyEquities Academy, you are going to learn everything about EasyEquities, how to open an account, how to figure your account once your account is figured, how to deposit money into your EasyEquities account. Then once your account is funded, then how do you go about finding companies? That is not searching for companies to invest. Let's say you've already made up your mind that you want to buy Sasol. EasyEquities Academy will teach you that if you want to invest, you click on the EasyEquities South African Rand account, you click on invest, then you get a search bar. It already has a list of other companies. You can either scroll through until you find Sasol, or you can just type the name of Sasol in the search bar. Then it will show you that a logo of Sasol. Then you can invest. Even the amount of money that you want to invest in there, it's all the information that you will find on EasyEquities Academy. You want to open a tax-free savings account, you want to know what can you invest in a tax-free savings account, you will also find that information in the EasyEquities Academy. It's a learning platform, EasyEquities Academy. You can learn, you can get a certificate as you finish certain levels, right? So if you want to understand EasyEquities as an investing platform, the best way to learn is by going through EasyEquities Academy, which you'll find on the EasyEquities website. So that's one thing that we want to cover. Where to find information about EasyEquities, it's under EasyEquities Academy. They also have frequently asked questions. For example, their FAQ website, it's like Google. You want to type how do you convert your rands to US dollars, or how do you convert your rands to Australian dollars, you're just going to get that answer. How do you withdraw? How do you sell your shares? How do you buy shares? You're also going to get those answers on the EasyEquities website. We are not saying that I can't help you to navigate the EasyEquities website or any other financial education content creators. They can assist you, but you need to understand that that thing, personally, I consider it to be the basic information that any investor needs to understand. You cannot use a platform that you don't understand, you see. And also it sort of creates redundancy. For example, if we create a YouTube video showing people how to open an EasyEquities account, if you go to YouTube, you search how to open an EasyEquities account, the first hit that you're going to get is from EasyEquities. Now we can't compete with EasyEquities, right? So why we always talk about EasyEquities, there are so many stockbrokers that you can use. When I started investing, I had searched different companies. At that time, mostly was just banks or financial institutions like PSG, Sanlam, but just different financial institutions. Then there were banks. If you go to your bank, I bank with Standard Bank. You go to Standard Bank online share trading. You read there, you find that they have a monthly management fee. Once you have an account, there's a monthly management fee. And the minimum with EasyEquities, you can invest as minimum as R5 if you just buy any company. Not sure about ETFs. The minimum is R5. But with other companies like banks, maybe they want you to invest a minimum of R500, meaning that if you have R150, you can't buy shares because you don't have enough capital to take a position, right? And also, so it's the monthly management fee, it's the minimum of investing. And then there are some other challenges. Maybe the platform, well, EasyEquities is not that simple, but it's also not that complex. It's easy to understand the platform if you get to use it for a certain period of time. You get to understand that platform. But okay, another thing is commission, right? EasyEquities has 0.25% if I recall well, but it's low. The commission on EasyEquities is just negligible. If you buy maybe with say 10,000 rand, you're not gonna pay more than 50 rand. If I recall well, you're not gonna pay more than 50 rand in commissions. Some stockbrokers, it doesn't matter how much you're investing, especially those companies that don't have minimum investment fee. You will find that you pay a commission of say 50 rand. At the time 2015, some companies had a commission of 100 rand. You just want to buy Purple Group, you're going to pay 100 rand to get in. Next time now you want to sell your Purple Group shares, you want to exit your position, you pay another 100 rand, meaning that to get in and out of the position, you pay 200 rand, right? So different stockbrokers, different commissions. So EasyEquities, one of the main selling of EasyEquities is low commission, no monthly main account management fee. The minimum fee to invest is so tiny. You can invest from as little as 5 rand. All right, I've already covered commission, but there are some other things. It was 4 things I forgot about. The fourth thing that I wanted to say, right? So we are not endorsing EasyEquities. We are not paid to endorse EasyEquities. We are sharing a platform that we are using because it's affordable. We can easily understand the platform. It does not have a lot of fees. And okay, the fourth thing was fractional shares. If you want to buy NASPAS, it's about 2,600 rand per share. Some other platforms, they don't have fractional shares, so you need to have that 2,600 to buy NASPAS shares. But with EasyEquities, even if you have 50 rand, 100 rand, 200, 1,000 rand, you can still get a portion of NASPAS shares. So when NASPAS does well, you can still benefit even though you didn't buy the full share. Right now, we see in other companies, especially like Robinhood and I think M1 Finance, but Robinhood and M1 Finance are US companies. We don't have access to those companies. Well, the US in some other things, it's a bit backwards because some companies, even though foreigners can open account, you still need to send papers. You still need to make them papers. So in South Africa, our fintech companies are a bit ahead because we can do a lot of things online. I haven't used the Frank app, so I can't say anything about the Frank app. I don't know how it works. I don't know the commission. I don't know if you can buy fractional shares, but there are people who are already using the Frank app, and they normally talk about it, other content creators who have used it, right? So now you know why we choose EasyEquities. It's affordable, it does not have a lot of fees, right? Now, what can you buy? Now you've opened your EasyEquities account. What can you buy? There are plenty of securities that you can buy on EasyEquities. There are shares. Shares meaning that you own an equity or a stake in a business. That is what we mean by shares. But that is not the only thing that you can buy on EasyEquities. They also have exchange traded funds, what is known as ETFs. In addition to that, they also have Etns. I'm not going to touch things like retirement annuities and baskets because with the emergence of ETFs, personally, I wouldn't understand why anyone would want to buy a basket. I understand there are financial managers who have a skill in picking stocks. So maybe you see someday in future there's a trend trader basket. It means that those shares were chosen by a trend trade. And then they're going to be fees for that, for picking the stocks and everything. So now if you look at Satrix top 40 ETFs, which already tracks the top 40 GSE companies, and it has a total expense ratio of 0.1, meaning it's cheap, like cheap to invest in the Satrix top 40. I wouldn't choose a trend trader basket when I have access to Satrix top 40, for example. But I'm not saying that people shouldn't invest in baskets. Baskets are chosen by wise people. I believe that they are smart, they know what they are doing, and the best case scenario is that the basket that you buy are going to outperform the general market. If they do that, then it's great, you're getting value for your money, right? So you need to understand the different asset classes that are available to investors. whether those asset classes are available in South Africa or available in other countries. So typically, there are shares like we mentioned, companies. Remember, companies, they are businesses, they conduct businesses. Sometimes they need capital to grow their business so that they can grow the services that they offer. So those companies, what they do, they go to the capital market to try and raise capital so that they can grow the business. Then as shareholders, we give them the money when we buy shares so that they can grow those companies. And in return, we expect to get capital appreciation. If I invest 100 Rand today, I hope that in future, that 100 Rand would have grown to more than 100 Rand, best case scenario. And then even before I sell my shares, if the company does well and it's profitable, I would like to see the board of that company declare dividend, meaning that I will be receiving dividends as a form of a payment for because I've given them my money. You see, so it's shares that you can buy on EasyEquities. Then ETFs, we mentioned that it's exchange traded funds. They are a basket of companies depending on the strategy. There are ETFs that tracks the general market like the Satrix Top 40 or S&P 500 or Vanguard Total, it's VTI, but it's the total index or VOO, which is also the S&P 500. Then there are separate or sector tracking ETFs like Satrix Fin, which tracks the financials, or Satrix Property, which tracks the property sector. There's Resources 10, or there's just a Satrix Resources. But the ETF assurers, it's plenty of them. It's just that I'll be talking a lot more about Satrix, but there's a Kosher, there's New Funds, there's Signia, there's OneVest, different ETF insurers. All of them, every time you want to buy an ETF, you need to understand the strategy of that fund manager, what they're trying to achieve. And they have something that they call a minimum disclosure document or MDD. If you want to find information about ETFs, there is a website called etfsa.co.za. It looks red and white. There you can find almost all the information about ETFs. There's also information about ETNs and stuff, but I don't invest in ETNs. But when it comes to ETFs, you'll find the information on etfsa.co.za. Then there you can browse through those different ETFs. Let's say, for example, you are looking for Satrix Property. You will go there, you will download the MDD. Then once you have that minimum disclosure document that they publish regularly, either it's every month or it's every 3 months, then you will see the strategy, what the fund manager is trying to achieve, what are they tracking, the total number of holdings that they have in that particular ETF, the cost of investing in that ETF. We normally look at the TER, the total expense ratio, but there is also something like the total cost. So I think the total cost is higher than the TER, or the TR is higher than the total cost. But make sure that you pay attention to the fee, because it means how much money the fund manager is taking out of that fund. For example, with a Satrix Top 40, the total expense ratio is 0.1%. That means like they are taking a tenth of a percent annually out of that amount of money. If the ETF is 1 billion, they are going to take 0.1% of that 1 billion. They are not going to eat the money. There are a lot of admin fees. Remember, these people are working, so they need to be paid. There's admin, the administrative task. They need to continue to market these ETFs, all those things that surround the business of providing that particular ETF. That's where the fees go to. Well, fine. Whatever salaries that they earn, we can't control that. But at the end of the day, we're not going to be investing for free. So we'll be paying a fee. So normally what I do, if let's say, for example, I want to buy a property ETF, I can look at Satrix Property, I can look at OneVest a property, I can look at a property, maybe let's say a Kosher property. Then I'll be looking at, okay, these companies, which companies do they track? Some of them, they just track all the companies or the listed properties. Some of them, they target specific real estate investment trust, whether it's a residential property or commercial property or even storage property, because, well, storage property, I'm not sure whether it fits to residential or commercial, but also even how they plan to distribute that income. Some ETF providers, they don't distribute, some they distribute. and then you look at the fees. You also look, because they are tracking a specific set. Let's say, for example, you are looking at an ETF that is tracking the property market. The share code of the property market, I think it's J205, right? So you look at the performance of the sector itself. How is the sector performing compared to the ETF that you bought? If the sector is doing much better, well, the ETF is going to be a bit behind the sector, because remember, there is some money that they take at the end of the year. However, they describe the year, whether it's a calendar year or it's just their business year. So the ETF can be a bit lagging, but you also see how lagging it is. You want it to track that sector as close as possible, right? So when you listen to other people, they say the easiest way to invest is to buy index or low cost index tracking ETFs. By low cost, they mean that you don't have to pay too much, right? Not all ETFs are created equal, especially boutique ETFs, because the fund managers, they work a bit extra to find those companies to invest in, and also sometimes you find that they do a lot of work compared to just simply tracking the top 40 ETF, because the top 40 is all the top 40 companies by market capitalization. You just invest, you do exactly what the index is doing. It seems like there isn't much extra work, which is why I wouldn't recommend to pay more fees if you are buying a Satrix, I mean not Satrix, if you are buying a JSE Top 40 ETF, just buy the cheapest that you can find, especially if they don't like the index a lot. Do keep that in mind, right? So now we spoke about shares, we spoke about ETFs. I will touch a bit about ETNs. I personally don't invest in ETNs. So ETNs are exchange traded notes. The people that normally buy ETNs, let's say for example you want exposure to oil, but in the JSE there is no security that you can buy that represent oil. You can't buy Sasol. Sasol is a petrochemical company. Yes, they have a bit of exposure to oil, but also they are more of a chemical company, right? So now you can buy an ETN that tracks Brent crude. Okay, there's two kinds of oil. There's West Texas oil, WTI, and then there's Brent crude. It differs. The Western Texas, remember in America, they also do have oil wells, but some of the oil come from the Middle East, oil comes from the ocean. So those are two different kinds of oils. When I trade the Brent crude. The WTI, the price per barrel is a bit lower compared to the price of Brent crude, right? Now you are bullish on oil, but you want to find a security that you can buy so that you can have exposure in oil. Then you buy an ETN, that exchange traded notes. Like I said, I never bought them. Some people, they buy ETNs when they want to have exposure to American companies. Let's say you want to buy Apple, then you buy an ETN that tracks Apple. Now the problem is, I think First Rent does have some ETNs. So if you buy a First Rent ETN that tracks Apples, it means that you are not buying Apple shares directly. You are going to pay First Rent to buy Apple shares on your behalf. It introduces a certain level of layers. The more layers you have in a security, the more money you're going to pay. So I don't see the reason of buying Apple through an ETN. Instead, I will just go to the EasyEquities USD account and buy Apple shares directly, then have the ownership of the Apple shares rather than introducing layers and layers, right? So that's why I'm touching on ETNs. Like I said, I won't touch more on retirement annuity. I'm not a financial advisor or financial planner. Things that concerns retirement, it's stuff that you need to speak with to your financial advisor or your financial planner so that they can recommend the right product for you. But just know that EasyEquities, you can also buy retirement annuities. Okay, so now when you want to start investing, because now people are like, okay, we saw a video, you were talking about a Time Bank and African Rainbow Capital investment, and we bought shares. Where to from now, right? There's nothing wrong with that. Before you buy shares in any company, you need to understand why you are buying those shares, right? There are investors, the people that are interested in the company. We're not going to talk about duration. According to SARS, if you buy shares and you sell them within 3 years, they consider it as trading. It triggers a different way to calculate tax. But if you hold shares in a company, you hold those shares for more than 3 years, it triggers another form of tax. Well, both of them are capital gain tax, but the rate at which you are taxed, it differs. So when we speak about investing, we're not talking about you holding shares for 3 years. We are talking about you, when we're buying those shares, what was your plan? For example, some people, they like a Purple Group. They know that it owns EasyEquities, among other things. They believe that Purple Group has a future. It's a fintech company. It's providing services that are easy to use. Then those people, they go there, they buy shares from Purple Group. That is an investment. They want to grow with EasyEquities, right? So they have an understanding of what Purple Group is. They research, they read. By research, it shouldn't sound complicated, like you have to go to the lab and do complicated stuff. It's just a simple Google desktop searching. What is Purple Group? Find information. What does a Purple Group does? You can, once you are in their website, you can even find, if you go to investor relations, you can find annual report, you can find financial statements if you are using financial statement. If you're using charts, you can go to the chart, you look at the chart to see whether the share price is on a downtrend, it's moving sideways, or it's on an uptrend. You see, that is what we mean by saying you are doing your research. The purpose of doing your research is so that you understand, once you buy something, why did you buy something? Don't go to social media, hear people talking about buying something, and you buy that thing. You don't even know why you're buying that thing. If now the share price go up, you don't know what to do, even though you are sitting on profit. If the share price collapse, it goes down, you don't know what to do, even though you are sitting at the loss. So before you even invest, you need to define, why are you investing? What are your expectations? How are you going to manage that position? Whether the share price, it goes up, or the share price collapse, whether there are dividends or there are not dividends, right? I understand that we normally see the lifestyle that other traders are living, specifically forex traders. If you go to the market with the intention of flipping a few thousand rands to a couple of 100,000 rands, or maybe even millions, and then buying a performance hatchback, yeah, if you can do it, you can live that life. But if you don't have the skill, you may not realize that life. You see, so it's important that you do have the skill, that foundation of knowledge. Then you can have an idea of what to expect in the market based on the market performance, but also based on your skill as a market participant. For example, whenever you read books about stock market investing, right, some of the books, they are written in the American context, not South African context. But there are some books that speaks investing in the South African context. You can buy a book by Nicolette Mashile. It speaks mostly about a South African context. There are many other books that you can buy, right? So the conventional wisdom is that equities, stocks, share investing return an average of 8 to 12% over many number of years, meaning that per year you can expect to grow your capital by at least 8%, or between 8 and 12%. Now you find somebody asking, yeah, if I buy shares for 1,000 rand, how much can I make, right? The logical thing to ask is, how long are you willing to hold those shares? If they are willing to hold those shares for 12 months, which is 1 year, then you can use this thinking that they can generate between 8 and 12%. It means that that person, from their 1,000 rand, they can get between 8 rand and 120 rand per year. You see, now when you tell the person the reality of stock investing, then they are surprised, because now they see all these other guys living a nice life, and then they think that they can just easily replicate them. Don't get me wrong, I'm not saying that you can't replicate them. I'm saying you need to understand what it means to invest, what it takes to invest, what you should expect based on reality, not on wishes. You can't just wish to be successful in the stock market. You see, so now, once you understand how the stock market works, how to choose the companies that you want, then you have an idea of how to manage your position. It sucks when you get a question from somebody to say, oh, okay, I saw a video you talking about Anglo American. I bought Anglo American. Now I don't know what to do. Remember, in my YouTube videos, if I'm talking about a company. I give the entry price, I give where I would put my stop loss, and if there is a target like a take profit, I say that is where I'm going to take profit. Once you're in a position, really there's nothing you can do. It's either the price is going to move into your stop loss, meaning that you will exit that position with a loss, or the share price is going to grow, it's going to go up and hit your take profit. Then you exit that position with the profit. But there's nothing that you can do. All you have to do is to sit and wait until the market decides where it wants to go, right? Now, there are so many ways that you can do your own research. Like I said, you can do fundamental analysis whereby people look at the business itself. What does the business do? The profitability. They go through the financial statements of the business to try and understand who's the management, what's product this business is coming up with, especially new product that makes it difficult for the competitors to take their market shares. That is part of fundamental analysis. Some people are good at it, some people are not good at it. I'm one of those people that are not good with fundamental analysis. That is why I always look at the chart. But when I'm looking at the financial statements, I can look at the balance sheet, the ratio between current asset and current liabilities. I'm looking for a positive figure if I subtract the current liabilities from the current asset. If the figure is positive, then I know that that business has a positive net working capital, meaning that in the short term, within 12 months, that business will be able to service the debt that I drew within that 12 months. Sometimes I look at the profitability. Is the business profitable, right? You can see that the revenue that they generated, then they subtract the expenses, they pay tax, then they say the profit for the period. If I say a positive figure, then that tells me that that business is profitable. Then from there, from that profitability, dividing the profitability by the number of outstanding shares, then I can see earnings per share. If they are positive earnings per share, again, I've already seen that the business is profitable. Then I expect the earnings per share to be positive. But that is not the end point. I want to see those earnings per share increasing. If the business in the last 6 months had earnings per share of 10 cents per share, next reporting period, I want to see the earnings per share to have increased, maybe say 12 cents per share, 15 cents per share. It's the minimum that I'm looking for is 30%. But as much as I have an idea of some of the fundamental aspect of fundamental analysis, I don't use them to make a decision. I look at those things once I already have a position. So I use a technical analysis. You see, technical analysis is price and volume analysis. I look at the price action. Simply put, I look at the chart. Is the price moving up or is the price moving sideways? Is the price moving down? If the price is moving sideways, I want to see the price break up to a higher levels. Then I will buy. If the price break to lower level, I won't buy it or I will exit that position, right? Some people they use a combination of technical and fundamental analysis. I choose to use technical analysis exclusively to make the buy and sell decision. Yeah, obviously, once I have a position, now I'm a shareholder of a business, shareholder of F.I.R.E. Now I'll be interested in the announcement that FNB makes, because whatever announcement that they make, they have a potential to have an impact on the share price. If they report good news, the market can be happy with those news, they can buy more shares, or if the news, the market perceive those news not to be good, they can sell the shares, for example. So if the share price is falling, I need to understand what happened, what did they do, right? But in the case that the share price is falling, it's hitting my stop loss, I will first take my stop loss before looking for the reason why the share price is falling. Or if the share price is moving up and it hits my profit, I will first start by adjusting my stop loss so that I can lock in that profit before finding a reason why the share price is going up. Do not be obsessed with knowing why the market is moving. Your job is to benefit from the market movement. If the share price go up, you need to make profit. If the share price is falling, well, you need to protect your capital by cutting your losses so that you still have money to take other opportunities where the share price could be increasing. You see, so it's important to understand that. I just want to see what else that I wanted to talk about. Okay, risk and money management. Risk management, it simply means that investing in the stock market is risk. How do we define risk? Risk is a possibility of a loss. We already had a video on YouTube where we're talking about people losing money, right? How can you lose money in the market? The share price can just collapse. It goes to zero. Then you still have your shares, but the value of your shares is worthless. That's like finding a mineral in the street. If the share price go up, that mineral can grow and become something as expensive as a diamond. But if the value of that mineral is collapsing, the same mineral, you still have the mineral in your hand, but it's becoming a coal. Well, we have a geothermal power station, so we know coal is useful. But I'm just trying to illustrate that if the value of your investment drops, you may still be in possession of your shares, but you are really not getting any benefit. And another thing to keep in mind, time is money. In 2015, when I was starting to invest, October 2015, the share price of MTN was up around 155, 156. Then there was some SIM issue in Nigeria. The share price started to collapse. So if you had held your MTN shares from 2015, you would have seen those share price drop. I think it dropped all the way to 30 rand per share. Now it's starting to climb back up. I think it was around 160. I'm not sure if it reached 170, but that is over 6 years. You don't have 6 years. Remember, the goal of investing is to make money and to compound those gains. So if you have capital that is tied into a losing position, you're not compounding anything because you're getting zero returns from those positions. Anything that you multiply by zero is zero. So I don't recommend to anyone to sit onto a losing position. I never allow my losses to exceed minus 10%. Tomorrow morning, tomorrow it's Monday, there's a video that is coming. Remember, we did a video where we were giving an update on the 10,000 Rand stock trading challenge, but there were some positions that were still open. So now we have closed those positions. We gave a commentary on that performance. If you haven't subscribed to the channel, make sure that you subscribe so that when that video goes live tomorrow at 6 a.m., you can be able to view that video. Subscribe, hit that bell notification so that every time there's a video that comes out, you can get notified that there's a video, right? So make sure that you reduce your losses so that it's always easy for you to recover, because every time you lose cash in the market, it's like you are taking a step backwards. So now you don't want to take 5 steps forward and 10 steps backwards, because it means that you will never reach your destination. All the time you'll be working hard to cover up the steps that you have taken backwards, right? So it's important that you limit your losses. And then in terms of money management, that is more like asset allocation. How much money? We know that a tax-free savings account, you can only put a maximum of 36,000 per tax year, not calendar year. Tax year, March till the end of February the following year, that is the tax year. So now you need to decide what are the benefits of tax-free savings account. You do not pay tax, capital gain tax, you do not pay it. If you receive distributions, because you can only buy ETFs, so there are no dividends, you just have distributions. We do not pay dividend withholding tax. Dividend withholding tax is fixed at 20%. We do not pay that. So it's better that if you want to invest, you need to first maximize your ETFs. But as you know, we don't have all the ETFs in the tax-free savings account. We're also interested in other companies. I mean, you couldn't just buy ETFs in 2021. ArcelorMittal performed incredibly well. Steinhoff, what else I'm trying to think of? Purple Group, they all performed well. So you wouldn't want to miss those companies. So just do think about your asset allocation. How much money are you going to put into your tax-free savings account? How much money are you going to put in your South African rand account? And if you have either the USD account or the Australian dollar account, you also need to think about that, how much money you're going to allocate there. Even now, the money that you allocated to each account, let's say you are on tax-free savings account, there is no need for you to buy Satrix top 40, Kosher top 40, Ash Button top 40. All of them are top 40. You are just buying the same thing, you are paying different fees on the very same thing. Just take all that money that you've allocated to the different top 40 ETFs, club it together, buy one ETF. As far as I know, the Satrix top 40 is the one that has a 0.1% total expense ratio. So that is where I would put my money if I want to track the Satrix top 40. You want exposure to foreign companies. There are companies that track a Japanese market, US market, UK, world. I think there are about five, but yeah, the ones that comes to mind now it's Japan, US, world, and UK or Euro, right? You can allocate some capital to those foreign companies as well. Maybe you want exposure to property, you can buy property tracking ETF. Want exposure to banks and insurance companies, you buy ETF in those Satrix Fin, for example. Different kinds. There is, I think it's new funds. There's MAPS Protect, there's MAPS Growth, there's Inflation. There are one ETFs that are tracking government bonds. So you can just mix these things based on asset allocation. Again, in the other companies, I mean, in the other account, like the South African Rand account, you can buy different shares in different companies. You can buy shares in retail, you can buy shares in banks, properties, real estate investment trust, different. But even if you go to real estate investment trust, you don't need to buy them all. There's no need for you to own Redefine, Growth Point, Nepiro, Castle, Mass Real Estate, all those different real estate investment trust. Find the one that is the best perform. I understand that some people they don't think that they have the capacity to select best companies. You don't need to worry about selecting the very best. You need to worry about selecting just to have that exposure. Once you have a position on Growth Point, you can compare Growth Point to other three real estate investment trusts. If Growth Point is a super performer in terms of share price appreciation, or depending on how you analyze the market, if you use fundamental analysis, you can look at the debt ratio, how much debt do they have, is the business profitable, the distribution, all those kinds of things. Then you just buy one, and then you can buy an ETF to have an exposure in all the other real estate investment trust that you couldn't buy, right? So, and also how much do you invest per company? How much capital do you have? Do you have a lump sum? Like, for example, do you just transfer 10,000 rand, for example, into your EasyEquities South African rand account, or you're transferring 1,000 rand per month? You see, so if you're transferring maybe let's say 1,000 rand or even 500 or any amount that you can afford, because I don't want to say a bigger number so that people now they are discouraged. Whatever amount that you have that you want to invest, you can deposit that amount, and then you can decide every month I'm going to put in 1,000 rand. Of this 1,000 rand, I'm going to take 250, put it in this company, take 250, put it in that company. That means that you have about four companies. Ideally, I do not recommend having positions that are less than 5%, meaning that if you have 100 rand, minimum each company you can invest it's 5 rand. Well, it's your decision at the end of the day. This is not a financial advice. I do not prefer to have a less than 5%. The reason for that is because even if the share price does well, it does not have an impact on your portfolio. But also you can think that okay, if I put 5%, I will have 20 positions. Some will do well, some won't do well. Well, if you already have about 20 positions, I might as well buy more 20 positions and have a top 40 index. You see, there's no point having too many large positions. I normally have about 8 positions because I cap my amount that I invest in each company. I cap it to 12.5%. So if you take 100, you divide it by 12.5, that should be about 8 positions. Anytime when I'm fully invested, I'm holding 8 positions, not more than 8 positions, right? So at the beginning, we spoke about the investment platform. Now, you know, in the YouTube channel, we look at the chart a lot. So I'm just going to call those as charting platforms where you can do a technical analysis. I use a trading view. There is a video that is coming to show you how to use a trading view, how to plot the chart and so on, something like that, and what kind of information that you can get from the chart. I use trading view. I'm using a free version of trading view. That is why there are a lot of annoying ads, but you can pay for trading view. I think the cheapest it's about $10 per month. and then it differs different packages that is based on your needs. Then there is also a website called investing.com. You can also do charting on investing.com. It's similar to trading views, just that you have to go through different things before you can get to the point where you can look at a chart, save a layout, and yeah, so that every time you go to that website, you can still use the same layout. You don't have to start by adding indicators once again or changing the chart style. So I use TradingView. You can also use investing.com. I'm not sure about Google if you can do any charting on Google, but I know that on Yahoo Finance you can look at the chart. It's simple. Once you know one charting platform, it's easy to use the different kinds of charting platforms. Most people who are traders, they come from the background of trading forex, so they are used to MetaTrader. If you have used MetaTrader, it's the same thing. You have the candles. If you use candles, you have bars or you have line. You have all the indicators that are found on MetaTrader. In fact, if you are in a platform, one of the most important things that you should concern yourself with, where do you find the buy and sell button? Because those are the most important thing. You are in the market to buy and sell shares, so you need to know where to find the buy and sell. Unfortunately, EasyEquities and most of South African brokers are not linked to TradingView. But if you are trading forex like Owando or FXCM, you can just do the trading full on TradingView because the buy and sell button is there. But in this case, we are talking about charting, so we don't have that buy and sell. But on EasyEquities, then when you scroll there, you will find the buy and sell. So right, I said at the beginning of this video, I wanted to talk for 30 minutes so that I just give you a brief background on what is investing, trading, what to expect in the market, the different assets that you can trade on EasyEquities. We spoke a bit about EasyEquities. So far, if you found value in the content that we just shared, we'll appreciate if you can give this video a thumbs up. If you haven't subscribed yet, we'll appreciate it if you can subscribe. Right, so now you can start typing your questions in the comment sections. I have the laptop in front of me. I'll be able to see your questions as they pop up there. What I won't be able to see is to chart, like for example, by charting, I mean looking at a chart, but I have an idea of how some of the charts they look like. I may be able to answer your question. Otherwise, I will just jot down the names that you want me to cover. Then I can make a separate YouTube video going through those companies to see what we find there and if there are any buying or selling opportunities. So if you have a question, don't hesitate, just start typing there. I will see the questions as they come. Until I see questions, I will just keep on talking so that I'll give you a bit of time to think about the questions, right? Then another thing that we need to address is that sometimes you find people, like I said, you can make money from the stock market, but the stock market is a place where you come with money. It's not a place where you can just easily get money out of. Yes, it's possible to make money from the market, but you bring in that capital. Now you find someone saying that I have some financial difficulties. That can mean a lot of things. Maybe those people, they are in debt, for example, or they have too much debt. Most people are in debt. Maybe they have too much debt. They can't sustain their lives based on the income, especially if they have a single income. Or maybe you find that somebody is unemployed. So now they're thinking, if I have 1,000 rand, let me just try this stock market thing. Maybe I can make a living out of it. Some people, it's possible they are able to grow a tiny bit of capital into something huge, but you need to have the skill. If you don't have the skill, you're just going to lose that money. So if ever I come across such person, I do not recommend those people they consider investing or trading, right? This is not how life works, but this is how life works, at least for now. It's either you have a all right, where can I get free information on direct dealings on the GSE? All right, Silas, I hope you are a gentleman. So I use shared data. I think it's shareddata.co.za or shareddata.com, but I normally use shared data. There's something that they call Stock Exchange News Services or SENS. Then that is where you can see the director dealings. depending on what you want to see. I normally look at a company result. That's what I'm more interested in. But sometimes they do say if there's a company that bought more, like if let's say Alexander Forbes buy 5%, more than 5% of a company, they need to declare that. So short answer, share data. I'm just not sure if it's sharedata.co.za. Let me try to type it there so that I give you the correct information. Okay, it's sharedata.co.za. That's where you find the information. Then I see what other question there from Central. Okay, how many companies would you advise one to have in a portfolio? Like I said, I kept my investment to each company to 12.5%. So at maximum, in theory, I need to have 8 companies. There was a time where I had over 20 companies. It became too much because some of the positions were less than 2% of the portfolio, meaning that even if they doubled in price, it didn't really have much of an impact. So between 5 companies and 15 companies, that's the maximum. I will not exceed more than 15 companies. And to make sure or to help reduce having a lot of companies, I can try, let's say, for example, I get a buy signal from FNB, then I get a buy signal from Standard Bank, then I get a buy signal from Capitec. It means that I'm getting buy signals from the banks. I don't need to own all the banks. I can decide which bank I'm interested in. Maybe I'm more interested in Capitec than Standard Bank, for example. Then to get exposure to the other banks, I will buy an ETF that tracks the financials. In this case, it subtracts financials. So 5 and 15, that's my sweet spot. Right? Yes, that's true, Mr. Moloto. Financial literacy is important in attaining financial freedom. As much as we try to speak about trading a lot, it's important that people understand the importance of financial literacy. People still need to budget because when you put money on EasyEquities account, an ideal scenario is that you have already covered all your other living expenses. I understand that, like the richest man in Babylon or any other financial literacy textbook, they say you need to invest first, then you're gonna go and spend. But we live in South Africa, but for to some household they don't have income at all. Some household have one income, so we can't just take textbooks teaching as they are. We need to be cognizant of the reality that we live in. So personally, I also, depending on your income level, if you have the means, you are employed or you have a business, but if you just have that money to invest, 10%, it's a good starting point. Some people, they stretch it. We see videos on YouTube, people saying that they retired at 30 or retired at 40 because they were able to invest 50% of their income. It depends on how much you can afford to invest. We still need to have basic things. We need shelter, we need transport to get to the workplace where we get money. We still need to send kids to schools. We also do deserve nice things in life. Vacations have never killed anyone, but do keep in mind that you need to invest because you cannot work forever. Some people are okay with the arrangement of working forever. I'm not okay with that arrangement. Life is meant to be lived. If there's an opportunity for you to get out of the workforce at an early age, by all means, do it. So yes, financial is very much important. Thank you, Tato. Tato is saying that it's a great advice. Sharp Mfetu. For those people that don't know, Tato is based in Vandel Bay Park. I forgot the name of the place where they live, but if you go to Facebook, for sure Twitter, but I know Facebook, Instagram, they have a handle there, the Muffiniers. It's just a group of few young guys. They're doing bakery services, birthday cakes, they do it, muffins. I will just say anything that is related to baking. So do check them out on Facebook, Instagram. Probably they even have a Twitter. Or Tato, you can even type in your social media account there so that other people can see, that they can go and see your product that you and your business partners are providing, right? So people keep those questions coming. I will also be touching on other things, right? All right, I was talking about the people who want to make some cash from the market, but they are coming from a not so good financial position. If you find yourself in that situation that you want to invest, but you can't invest because you don't have capital, look at your expense, look at your budget, how much is coming in, and then look at your expenses, where that money is going. I will come back to your question now, Mr. Bodiba, right? So look at your budget. Where is your money going? Right, we need shelter. The best case scenario, we live in houses that we love. Are you driving a big car? Can you afford to reduce the size of your car? If you are driving a 4x4 fuel guzzler, is it possible for you to downgrade to a smaller Nyana car so that you free up some cash to pay off other debt? Like credit card debt is one of the worst debt that people have. I know personal loans have the highest interest rate, but credit card also have the high interest rate. Store accounts, clothing accounts, they also have a high interest rate. So we want to cut down on those. Cut your credit card bill, cut your clothing account bill. Ideal case scenario, just cancel the clothing account so that you free up some cash. But people's situations do differ. If you find yourself that you are already in the hole, stop digging because you're going down. Stop digging and start climbing up. Cover your debt. David Ramsey, there's a book by South African, I think From Debt to Wealth or something like that. I remember the color of the book, it's a bit greenish. Find that book, see what strategies that you can use to reduce your debt. There's no debt snowballing, things like that. Just starting with the small interest or the small loan or the high interest, all those sorts of things. Fix your finances so that you can free up some cash that you can use to invest. Right, the question is, in terms of retirement, what do I think about the 4% rule of retirement? Right, brah, I see people, they talk a lot about FIRE. I think FIRE is something about financial independence, retiring early. This is how I look at it. If I'm earning this much and I'm already living a minimalistic lifestyle, I'm sleeping on bread with butter and coffee with no milk so that I can retire early. It means it's possible that I'm already living a miserable life. So I don't want to retire and continue to live that miserable life. I don't have a problem with people planning to spend or to draw 4% from their investment. I'm coming from the school that we need to increase our income, not reduce our expenses. If I'm driving a Volkswagen Jetta, I still want to drive a BMW M4. So I'm not going to downgrade and buy a Toyota Etios so that I can retire early. I would rather try by all means to increase my money so that I can still drive that M4 and live a happy life. But if you want to retire, it depends on what you want to do when you retire. If you hate your job, hopefully you don't hate your boss. If you hate your job and there's an opportunity for you to get out of that job so that you can do other things that you like, then maybe it's something that it's a statement, or maybe it's a way for you to get out of that employment. Most of us in South Africa, we are economic migrants. I live in Pretoria. I'm from Newcastle, KZN. I know life at home is really nice. The quality of life is great compared to the quality of life in Gauteng. Well, not in terms of finances, but it's affordable, a lot of things. So if I can prepare myself that I can leave Gauteng as early as possible, sure, by all means I can do that, assuming that when I go to Newcastle, I'll be doing things that I love. So I agree with that. What I don't agree with is living a boring life because you want to retire early and then retire, continue to live a boring life. I do not advocate for that. Okay, let's see what other questions we have there. Essentially, is there a website where you can be able to buy gold? Dude, just buy a gold ETF depending on the broker that you are using. I know EasyEquities USD. There's an ETF. I think that ETF is from SP Spider. We just call it Spider. I will look at the name and then text you on TikTok, but there's a gold tracking ETF, or even on EasyEquities, there's a new gold ETF. I think you can buy that new gold ETF and then you can track gold. But if you want to trade gold like Forex, Most of the brokers, Hot Forex, you can trade gold. XM, okay, I've been using Hot Forex for a long time, but there are so many other brokers that you can use to buy gold. But remember, with those brokers, it's leveraged. But if you buy an ETF that tracks the gold price, it's not leveraged. You can buy the new gold ETF on EasyEquities. You can buy the Spider ETF, or just say Spider ETF. You can buy it on EasyEquities. I normally buy those ETFs on eToro. I have an account on eToro. I'm not sure if people in South Africa can now open an eToro account, right? So yeah, other website, I don't know. Krugerrands are legit. If you can buy yourself a Krugerrand, depending on the price of a Krugerrand, at least today you are getting a physical gold that you can store. I don't know what it costs to store gold. You don't want to buy something that it costs you 10,000 to store per year, but the value of it is not growing by 10,000, because then it means you are losing money, right? 5 to 10, 15 companies. Is this only on EasyEquities, or it include your ETFs and other different accounts like Australian dollar or US dollar? All right, my brother. Okay, Gates. Yeah, I think you're a gentleman, right? Yes. If I say 5 to 15 companies, if I'm speaking in the context of the South African Rand account on EasyEquities, yes, I will text you simply. So these 5 to 15 companies, if I'm looking at the EasyEquities USD account, that's why I'm talking about it. If I'm investing in the USD account, I'm also going to buy 5 and 15 companies. Remember, the number of companies is based on the value of that portfolio. So for example, if I have 10,000 Rand on the South African Rand account on EasyEquities, it means that I'll be investing 1,250 per company. That's going to give me 8 companies. If I have 10,000 US dollar in the USD account, it means I'm investing 1,250 US dollars or Australian account. So each and every account type, if I can put it like that, I'm looking to invest 5 to 15 companies. These companies are different. The companies that I find on the South African Rand account, mostly it's South African companies. The companies that I find in the USD account is US companies. So I want to buy 15 US companies. What I won't do, I won't buy Anglo Gold Ashanti in the Rand account, then go to USD, buy Anglo Gold Ashanti. I don't know if Anglo Gold Ashanti is also there in the Australian market, and then buy it there. I just want to buy it in one company. I don't need to hold Anglo Gold Ashanti in different platforms. So I hope that I've answered your question. So now in the end, if you have all these accounts activated, let's say it's 3 accounts, that means you'll be having 45 companies. Not bad. Remember, they are diversified, globally or regionally diversified. So to me, it's not a big deal. It looks good. But what I won't do, I've been investing a long time in the JSE, meaning that I've been investing in the South African Rand account. I've only started investing in the USD account last year, March or February. I haven't invested in the Australian account because the size of my USD account is still small. I don't want to have 1,000 Rand in South Africa, $100 in US, $100 in Australia. I might as well bring back those dollars and then have a 3,000 Rand in South Africa, or maybe ship all that money into that US dollar. But I don't want to have tiny balances spread all over the world, because the amount of capital you invest in a company, it also counts. It counts a lot, because if you invest 500 Rand in a company and that company declares 5 cent dividend, you're not going to get more than 5 Rand, you see. So 5 Rand is not that significant. Then you start asking yourself, is this thing even worth it? Don't get me wrong, investing is worth it. It's just that because you are buying a tiny position, maybe based on the amount of capital that you have, then you maybe for now you might not see those large returns. So I prefer to concentrate my capital. ETFs is one way that you can concentrate the capital. If you don't know how to choose individual companies to invest in, you just invest in the Satrix Top 40. You already have an exposure to 40 companies, they are diversified. the ETF distribute every quarter, meaning that every 3 months they'll declare distribution. Some cash is going to go into your account. It's up to you whether you withdraw your cash, something that I wouldn't recommend. Remember, we want to compound those gains. Every time you withdraw in your account, you are just reducing the effect of compounding, which is another question that you always get a lot. How do I withdraw from my account? I'm not saying people shouldn't withdraw. People, they know why they are withdrawing, but if you just withdrawing that money so that you can chop it, it's, in my perspective, it's not a wise decision. If maybe push comes to shove, you've exhausted your savings, your emergency fund, and you've got something that really needs you to put capital in, then there's no need for you to own shares when you have something that really needs your money. But if you just withdraw money for the sake of going around showing people that you are a stock trader, you are making money, look, we start from zero. Well, maybe not from zero. We start from whatever a balance that we start with. Let's say we start with 10,000. You grow that capital to 100,000, not necessarily just by compounding your gains. Maybe you still contribute. You reach 100,000. Now you are playing it a different you're playing a different ball game. 2% market move is a lot to you now. It's 2,000 rand compared to the 200. Well, it was not even 200 at 10,000. It was like 20 rand per day movement. So now you've worked hard to reach 100,000. Why would you want to withdraw that money? You grow that capital to 500,000. Why would you want to withdraw that money and buy a car? Because if you withdraw that money and buy a car, you're going to start afresh 200,000. Best case scenario, going to start back at 100,000. Worst case scenario, going to start back at the tens of thousands. How long is it going to take you to grow back to 500,000? You see? So, like Mr. Molot was saying, financial literacy is important. If there is a way for you to cover your expenses, pay rent, pay a bond if you have a bond, pay for your car, buy food, have bit of money to go out if you want to go out, such things like that, use the money on the side. Don't touch your investment. You want your investment to grow. You're not going to reach million rand withdrawing your capital, right? If you are trading for a living, yeah, maybe let me put it like that. If you are trading for a living, then you can invest. But for you to trade for a living, it means that you need to come with a lot of money. If you look at the question about that 4% from Silas, you see, when you reach retirement, you have a capital that hopefully, depending on the kind of work you are doing, it's already in the millions regions. Then you're just withdrawing from that. Same thing. If you want to trade for a living, you need a fat account balance. Starting maybe a million, 10 million, then you can make, 10% return per month on 1,000. That's what? 100 rand. 10,000, it's about 1,000 rand. 100,000, it's about 10 grand. So now the market is not consistent. You're not going to get consistent returns, no matter how skilled you are. Sometimes the market just goes sideways. So if the market goes sideways, it means that in that month you don't have money. Even if you have 100,000 and you can generate 10% in some good months, if there's a bad month that is coming, now you can't withdraw the 10,000. Now, how do you cover your bills? You see, so it's important that you look at it from that perspective as well. Do you have the skill to generate consistent income? If you do have the skill, do you have enough capital so that when you generate that profit is enough to cover whatever it is that you want to cover? If it's expenses that you want to cover, or if it's just some extra income that you want to have, you see. So yeah, it does differ. Anyone that still has questions, just keep on typing those questions. As I read them, I will answer. Now it's 3. Maybe let's just push it to 3:30 or even 4:30, depending on the questions that we're getting from people, because the only thing that we won't be able to do now is to look at the chart. I just have limitations on the hardware. I can't stream and share the screen at the same time. Then the PC just start breathing fire and then it throttles down. So this is why it's more of a webcam, but I can see your questions as you type them. I can easily search for some of the information there on the site and then try to to answer your questions there. So any questions that you have, I shall be able to answer it. If it's something that I'm familiar with, I don't want to answer something that I don't know, right? So, all right, some people, they normally ask, how do I transfer money to the USD account? I use EasyFX. So EasyFX is the way that EasyEquities, they transfer your rents to your USD account. It's simple. You deposit money into your South African rand account. Once that money is reflecting in your South African rand account, there at the top left hand side on the menu bar there, when you click where you find stuff like statements, deposit or withdraw, I think there's also easy FX or transfer. When you click there, it asks you where you want to transfer money from. So you want to take money from the South African account and transfer it to the USD account. Then they will tell you the fees. It's been a long time since I transferred money there, but it used to be, I think it was $4 or so. But they will tell you the fees. Then you convert your rents to USD. It's a process, it takes some time. Then you just wait until they are done with the process. Then you get an email to say that your funds have been allocated into USD account. Depending on the bank that you use and the day when you do that transfer, I bank with Standard Bank. I can transfer money on the business day, meaning Monday to Friday. I can transfer the money before 8 to my South African Rand account. Usually, these EFT deposit, they easily reflect. I mean, they quickly reflect. So if I transfer before 8, maybe even before 8, I get a notification from EasyEquities that says they have received money. So I have money in my South African Rand account. Then I log in, I do the EasyFX. If I do the EasyFX before 8:30 in the morning, about 12 midday, 12:31, I get a notification to say that the transfer is complete. Remember, they speak about, I think, 24 hours or even 78 hours, but they also speak about the time when they do those conversions. So I think the latest is 9 in the morning or so. That is why I try to do it before 9, so that when they finalize those things, they can also transfer my money. So if I get a notification that that money is being allocated before 1 p.m., for example, remember the US, they have different time zones. Sometimes the market opens at 3:30, sometimes the market opens at 4:30. So I guess in winter, that's when it opens at 4:30, because now it's opening at 4:30 and it's winter in the northern hemisphere. So by doing the easy FX in the morning, it helps me to, what's this thing? It helps me to be able to invest when the US market opens. So I don't have to spend time uh, waiting for those rents to be there. All right, Silas is asking about tax in terms of trading, investing. Right. I forgot the name of that lady, but there's a lady on the Easy Equities groups. I think she's a tax practitioner. She's the person that can give the best tax advice. But also on Twitter, there's Andre Bothma. He's also a tax specialist. But I'll just give you the way that I understand it, right? The textbook definition of tax when it comes to share investing: a share is an asset, right? So when you dispose an asset, you trigger capital gain tax. We call it capital gain tax because we work on the assumption that you will have made money from that investment, right? So if you have owned those shares for 3 years, there's a fixed capital gain tax. I don't remember it, but let's just say it's 20%. So you're going to pay 20% of that profit, right? For a person or an individual, I think they subtract 40,000, and then whatever is remaining as profit above 40,000, that is what is taxed. But this is a gray area. So let's work on the assumption that if you make a profit, you are going to pay 20% in capital gain tax. If you have held that share or asset for less than 3 years, if you have held it for more than 3 years, SARS consider that as investing, right? Since they consider it as investing, there is a fixed Remember, if you have held it for less than 3 years, it's still going to trigger capital gain tax, but it's not going to be the fixed tax. It's going to be, you are going to be taxed at your marginal tax rate. So if you have income and let's say you are sitting on a 20% tax bracket, for example, then your tax is going to be 20%. But if you are a high income earner, you are sitting at 35% income tax, that is where your profit is going to be taxed at. It's going to be taxed at 35%. Right? I'm a trader. Yes, I invest. I'm a trader. I don't make my trading decisions based on tax. I'm not trying to write the share for 3 years so that I paid it at 10%. To me, trading is like a business. You won't stop growing your business just because you want to reduce your tax liability. This is not a tax advice, right? I won't stop trading, actively trading, closing positions, opening other positions. You know that turnover growing. If I was profitable in one trade, using that capital to take other opportunities, make more profit, just rapidly growing that capital. I won't stop doing that because I'm avoiding to pay tax. When tax SARS comes knocking, I'm gonna give SARS whatever is due to SARS and keep whatever is due to me. So yeah, that's the thing when it comes to trading and investing. If you hold your shares for more than 3 years, you pay less capital gain tax or that fixed percentage. But if you have held that asset, remember it's per share. So if you buy 100 purple shares today, your 3 years starts today or tomorrow, but your 300, I mean, your 3 years, it starts today. If next month you buy another 50 people group shares, those 50 shares that you buy, their 3 years start at that time. Now, the thing is, I'm not saying that it's going to happen. What happens if you buy purple shares today? You write them 2 years, 11 months, and then the share price of Purple Group, it drops. Then now it goes to a loss. You see? Now, what are you going to do? Are you going to exit at a loss because all these years we're trying to save tax? I'm not the guy that's going to do that. If the share price is falling, I get out. Right? With trading, you can separate your losses because it's like cost of doing business. You have losses there. EasyEquities will send you your tax statement. I'm not sure if it's called IT3P or something, but EasyEquities, they do send you your, or you even download it yourself. They don't have to send it to you. You can download it on their website. So there you can see the capital gain that you made, the dividends that you have received, local and foreign, the interest that you received. If you are an employee, your employer will also give you your IRP5. Yeah, it's IRP5. Your banks will send you your IT3P forms if you have savings that are accumulating interest. So you take all that information, you go there, you generate your tax return. Then I know is equities, the figures, they are sometimes there already. It's just a matter of confirmation that the profit or loss that they report is the same profit or loss that I see on my tax statement. Then just you correct that. Then SARS is going to do the magic thing and tell you if you owe them or if they owe you. But if you run it as a business and you can afford an accountant or a tax person, they can also assist you with that. And if you have a tax person and you're a trader, you might as well start subtracting. You use a laptop to do the trading. The laptop depreciate. Well, maybe it's going to be a case of, did you buy the laptop using a business account? Are you trading using a business account, for example? But the laptop that you're using, it's a cost of doing business. The internet that you are using, well, like I said, I'm not a tax person, but I know that you can also subtract a portion of the building that you are using when you do your tax return. So don't stop taking opportunities or cutting your losses just because you are thinking about tax. I know that some people, they will just want to write that tax, delay payment. It's good, it works, it allows people to grow their wealth and so on. But in reality, don't just dwell on tax so much that you miss opportunities. I hope that I've answered your question. Right? Do I offer classes? Okay, this person is Lawrence Challenjal. He wants to learn the proper way to create wealth over time. Right? Remember, I always say that I have ebooks on Gumroad, but the ebooks are for people that already know how to trade or even know how to chart. The systematic trend following, it has 3 videos. One video will show you how to do risk management. One video will show you how to set the chart. One video is going to show you how to use a scanner, because we set out some rules. How do we identify companies that we want to buy? So instead of going through all the 300 plus GSE companies, you can just run a scanner on TradingView. So that ebook can help you. That ebook costs 25 US dollars. In any of my videos, once we are done with this video, I'm going to edit the caption and put the links there that will take you to Gumroad. But all the other past videos already have a link. If you follow me on TikTok, you will see the link there on that link tree. You can browse through and find those ebooks. Then in terms of classes, last year 2021 we did have a mentorship program. We were having like sort of 2 hour 3 hour Zoom meeting with people. We will go through the the thinking behind the strategy that we use, and then we will look at the chart, introduce risk management as well. We did get a lot of people. I think we had about 20 people. Maybe sometimes in a month we'll get 1 or 2 or even 3 people at a time. But overall, the group, we had about 20 people there. Last year it was cheap, and we did say in December that it's never going to be cheap again. So if you want a one-on-one, whether it's live or if you stay in Pretoria, you can come my side. Then it's going to be 3,500 rand. I'm saying this in a public platform so that other people can see, so that I don't go on the site, I scam you. It's going to cost you 3,500 rand. What are you going to get from that 3,500 rand? You're going to have about a 3 hour session where we go through the strategy. Depending on whether you already know how to chart or you don't know how to chart, then you can go through charting. I prefer to use a laptop. I know some people, they can do charting on a cell phone. I just like big screens, right? You go through charting, then you go through risk management, and then there's mentorship. You can talk to me on Telegram for 12 months, period of 12 months. The purpose of mentorship is to make sure that whatever that we discussed, you can follow it, you can make money from it. Remember, I'm not the guy who's going to make the money for you. It's you following a certain setups. The setups has a high probability of profitability. It's not guaranteed that you're going to make money from those setups. It's like trading any other setup. Let's say, for example, you are trading invest head and shoulder, or just head and shoulder. We know if it's invest, it's a bullish signal, but it can fail. If it's a bearish signal, it's the head and shoulder, not invest. It can also fail. So it's just to ensure that we guide you. We see that, okay, you're waiting for the setup to set nicely. You are setting the stop loss. You are not risking too much. You are risking enough. You can sit on your hands and wait for that trade to work out. If it works out in your favor, you are able to make money. You use that money to other positions. If it's time to exit the positions, whether it's the stop loss is hit or the take profit is hit, you can do that, and you are improving as a trader or as an investor. We share books that we think that they can assist you. I share, if maybe I was watching a YouTube video, I found an interesting video, I share that video with those people, or an article, I share it with those people. So that's what the mentorship constitutes of. I know a lot of people, they are interested in strategy. I just want a profitable strategy that I can make money. The strategy is half the story. There's a lot that goes in before you can become a consistently profitable trader. You need to have a certain mindset. You need to understand the difference between risk, volatility. How do you manage risk? How do you take advantage of volatility? How do you use volatility to manage risk? All those sort of things. So I don't see myself as someone who just teach people how to find stocks to invest in. I see myself as someone who help people become better investors or traders by ensuring that they can stick to the rules. They can act when the market is giving them signals, because the worst thing that you can do to yourself is to second guess a buy signal, for example, or to second guess a sell signal. If you second guess a buy signal, you might miss a stock that grows 50% plus. If you second guess a stop loss, instead of taking a minus 10% loss on your position, you might end up taking a minus 50% loss on your position. So we need to ensure that you are at peace with losing money if you lose money, and also you are at peace taking whatever profit that the market give you. You don't become greedy. Now you are sitting at a 30% profit, the share price is starting to reverse, but you keep on saying, yeah, but it can go up. Dude, nobody knows whether the market can go up or can go lower the following day. So instead of staying there being greedy, just take that 30% that the market is giving you at that particular moment. If there's another buy opportunity that comes, then you take that buy opportunity. So the answer to your question, you want one-on-one mentorship, that's going to cost you 3,500. The easiest way is to go to Gumroad, buy my ebooks. Any of the ebooks, they cost $25. You also have a $10 per month Telegram group that you can join. To reduce that 3,500, we are going to do a video series of the strategy and everything, put it on Gumroad so that you can sell that at half the price. But it depends on what you want to achieve. Remember, price is what you pay, value is what you get. In life in general, now I'm not just talking to you based on your question, I'm just talking to everyone. Understand that some things are worth paying for. I'm not marketing myself that I'm worth paying for, but you just need to know that some things are worth paying for depending on the goal that you want to achieve. The person that is driving a Ferrari, I'm sure it's worth buying a Ferrari. Okay, so I hope that I've answered your question. Right, Soul is asking, is there a possibility that you can withdraw every month if you're investing only in SA using EasyEquities? Let's say you have 50,000 to invest and you need to be able to withdraw 4,000 per month. My guy, that will depend on what you invested in. For example, um, one thing that is sort of guaranteed to go up in value, there's an ETF that's called New Funds Track 3 months or something, but it's a money market ETF. It tracks the interest rate. Remember, when you save money, that's the safest thing that you can do. Your money is guaranteed, the interest is somewhat guaranteed. Depending on the interest rate at any time, if the interest rate are 4%, it means that that value of the ETF is going to grow by 4% divide by 12, because the 4% is for the full year. Then each and every month they'll be putting a fraction of that 4% back into the ETF, right? So that one, the value of it changes each and every month. If you look at the chart of that Tracking Etf, it's just going up nicely because it's a interest account, like any other savings account. Less risk, low return. There's no relationship between high risk and high return. It's not a wise statement to make. Then what else can you invest in? You can look at companies, different companies that can pay dividends in January. Another company is going to pay dividend in February. Another company is going to pay dividend in April, just like that. But now if you have 50,000, that means that you need to divide that 50,000 into 6 companies, because the company that paid you a dividend in January is also going to pay you a dividend in July. We are assuming that company is profitable and the board will keep on declaring those dividends. So if you take 50, divide it by 6, it means that you need to invest 8,300 per company. Now, remember, the dividend that you receive are per share. So depending on the company that you invest in, let's say that the company has a dividend yield of 5%. The dividend yield is calculated over a 12 months period. So if a company has a dividend yield of 5%, if you put in 10,000, it means that you're only getting 50 rand, my guy, not 500. Yeah, 500, yeah, 500 is 5%, 5,000 is 50%. It means that you are getting 500. You see, you are far from that 4,000 that you want to invest, that you want to receive per month. And also, 4 times 12, 12, let me just use a calculator and not embarrass myself. That 48 grand, it means that when you are looking for a company that can grow by over 95% in a year, I'm not saying it's impossible. it's unrealistic. Fortunately, unrealistic and impossible do not have a direct correlation, because if you put in 50k and you want to withdraw 4,000 per month, yeah, that value of that investment will be drawing 48,000 after 12 months. From 50,000, less likely to happen. I won't lie to you, it's less likely to happen. In South Africa, there's no company that can pay you a dividend every month, but there's an ETF that can pay you dividend every 2 months. That ETF is the Satrix Capped All Share Index. We have a video on YouTube. I will also link the video there so that you can see it, where we talk about this new ETF. It was listed, I think, in November or October. So that one pays a bi-monthly, meaning every 2 months you get distributions there. So depending on the dividend yield of that ETF, of which I don't think the dividend yield is greater than 5%, even there you won't be able to get 4,000 per month. The highest that I have received, which was last year from Redefine in December, I got about 1,460 from Redefine dividend. But the dividend yield there was high. I invested 10 grand, so that's about 14%. The dividend yield at the time was more than 13%. So I was expecting the dividend. But remember, it only came in December. The next time I will see a dividend from Redefine, if it comes, it's going to be either June or July, you see. So if you use a dividend yield, you target companies that have high dividend yields, maybe dividend yields that are greater than 10%. You're not going to get a lot of companies. Some of those companies, the share price is low. Maybe it's going to be real estate investment trust, because those are the stocks that have just been beaten in the past. The share price is low, but since they are real estate investment trust, they are forced by the regulation to pass those distributions. As long as they collect rent from their tenants, they're supposed to pass that rental income to investors. So real estate investment trust or property companies, that's where the dividend yield is a bit high. And that's where you can maybe make some a bit of money. CA, we don't care about your sexual orientation, it's yours. It's good for you. It's a free country, free world. You can be whatever that you want to be. Okay, so Ntate Mavuso, so Livuso, I hope that I have answered your question. We need to ensure that we have realistic expectations when it comes to the market. We don't want to sell you um, we don't want to sell you incorrect information, right? We don't want to mislead you. We want to ensure that whatever information that we share with you, it's correct information, so that you can be able not to be surprised. We don't want you to be surprised whenever the market, you don't get what's this thing. We just want to ensure that you don't have improper expectations, right? Can we have this discussion often? Yes, Ntate, I would like to have these live sessions every week, every Sunday. I'm not going to ask people when we should have this. Remember, we live in a democratic country. Someone's going to say Monday and whatsoever, different times. The goal is to have these conversations every Sunday at 2 p.m. I know some people, they go to church, so that's why we chose 2 p.m. Some people maybe will be back. So I mean, as we have proper hardware, we will be able to share different screens and maybe even go to the charts. But for now, I'm just using the cell phone for this live. Then the background, I'm using a laptop where I can easily read. Well, I can still read the questions because they pop in here on the phone. But I'm also watching this session on the site. So yes, we can have this discussion often. The goal is to help as many people as possible to understand investing and trading. And yeah, for those people that already know how to invest or trade, maybe they don't see consistent performance. We try to understand what is their challenges. Maybe some people, they invest too little amount of capital that they put in the market, or maybe some people, they have what's this thing, Sometimes people they just buy companies that are on the downtrend. Okay, maybe a topic that we should touch on before we close. We will close at 4 p.m. Penny stocks, right? There's nothing wrong with penny stocks. We know that the teachings it's best to buy a good quality company at a low price. But what is a gray area is choosing what is a good quality company. Let's look at Avenge. Avenge is a construction company. There are other construction companies. There's Stefanotti, there's Murray and Robert, there's Robex. Okay, Robex is mostly involved in road construction. But what makes an investor choose Avenge over Murray and Robert, for example, right? The guys that collapsed the bridge on M1, they were probably penalized by the market for poor engineering. I don't remember the name of that company, whether it was Murray and Robert or it was Stefanot. So such incident, they also do some bring some effect in the market. But if you look at the company like Avenge, just because you see cranes, see people wearing Avenge jacket, seeing people working, and you see banners of Avenge, it does not necessarily mean that Avenge is a good quality company. Don't get me wrong, I'm not saying that it's a bad company. Remember, there are institutional investors. Alexander Forbes, Coronation, Prudential. Prudential has changed the name to M&G. But those are what you call institutional investors, the people that administer your pension funds, your medical aid, stuff like that. So they have better understanding when it comes to stock picking. So they can do a better job in selecting a company. So if you say that Avenge has been trading in cents, if you consolidate the shares, then I was going to trade in rands, then maybe the institutional investors they can come in because by law they cannot invest in penny stocks. The question is, Avenge didn't just trade at 1 cent. At some point, Avenge was at around 10 rand per share. I think 2016, 17, 18. There's a video from there's a stock. Okay, there's a guy called Paul. I think his name is Paul Vestak. He's based there in probably Rosebank or Hyde Park, but he's a fund manager. So there was a show called Hot or Not. Then they will discuss different companies. At some point, they were talking Avenge. Doesn't matter whether they said at the time Avenge was hot or cold, but at the time when they had that video, Avenge was trading at 10 rand per share. So institutional investors could have invested in Avenge at that time. The question is, why didn't they invest in Avenge at that time? Maybe Avenge was not a good quality company. It's possible that that's the reason why they didn't buy Avenge. So now if you raise an argument to say that just because by consolidation the share price is going to be 25 rand, then those guys are going to come in. They might not come in if the company is still not a good company. But there is JP Morgan and Chase. JP Morgan and Chase is a US investment banker. They're involved in a lot of things, advisory, mergers and acquisitions. Now on share data, we always get an announcement that JP Morgan is buying more of Avenge, which is a good thing. One side, it's good thing. One side, it's not a good thing, right? No problem with foreign companies owning local companies. It's a globalization. We believe in globalization. We can invest anywhere. But there's a book called Barbarians at the Gate. That book it talks about leveraged buyout. That is, it's these investment bankers and other companies, lawyers, sometimes even the management, they're involved in buying shares in those companies so that they can buy out the minority shareholders. Then they delist that company. Once that company is delisted, it can operate as a private company depending on what they want to do with that company. They can take it private and revive that company, grow it back before they come back and they list it. Sometimes they take a public company, they take it private. They strip the company its asset. Once it's the skeleton that is lying dead there, then they just discard that company. I'm not insinuating anything about the JP Morgan's dealing on Avenge, but I just need you to keep in mind that not all institutional investors come to invest because they want to fix the company. It's not always the case. It's nice when it's happening. Well, it's a different case when it's not happening. So yeah, penny stocks. But now, before you buy penny stock, you need to ask yourself, how high has this company traded? Not with an intention to draw a conclusion that, okay, if Steinhoff once traded at 120 per share, now it's trading at R5 per share, that means that Steinhoff can grow back to 120 rand per share. No, you want to understand, why did Steinhoff fall from 120 all the way to 2 rand per share? All right, Steinhoff is simple. It was an accounting scandal. It's there, it's everywhere. People, they read about it, they know it. Then, yes, Steinhoff is still a good company, except that it's a good company that participate in accounting fraud. Well, you can take that accounting fraud and pinpoint or pin it to one of the management of Steinhoff. If they can deal with that, they might have a chance to fight and come back and grow and become a good company. What does Steinhoff own? Do those subsidiaries, are those subsidiaries profitable? If those subsidiaries are profitable, I don't own a Steinhoff shares, I own a Pepco shares. Pepco shares is doing well. Steinhoff, at some point, they were owning 80% of Pepco. Then sometime last year, they sold some of their shares so that they can pay some debt. So their ownership has reduced a bit, but it's still over 60%, if I recall very well. So when you buy a penny stock, you really need to do a bit of thinking so that you understand, how did it become a penny stock. A penny stock. There's this company, Imbali Beauty. For the past 3 years, Imbali Beauty has been trading at 1 cent per share. The people who started investing in 2018, they thought Imbali Beauty was going to double in price. The people who invested in 2019, they thought that Timbali was going to grow from 1 cent to 2 cent. The people that bought Timbali last year, they also had the same, um, they're hoping for the same thing. It never happened. That should tell you something. I'm not saying Imbali Beauty is not a good quality company, but the question is it a good quality company? Is it a company that you can be proud of to own in your portfolio? Don't go around chasing stocks that have been beaten. Make sure that you invest in good quality companies. If a company like MTN is down, maybe it's due to some Nigerian regulators, or they can't bring back some profit in Iran. If those profits, they are still entitled to them, at some point they can bring them back. Maybe MTN is going to continue to perform well. So you're buying a good company at a low price. That's what Warren Buffett means when he says you need to buy good quality companies at a low price. It does not mean you should just blindly dig in the dustbin trying to find a cheap company in terms of rent or USD that, okay, this thing cost less than 1 rand. Let me buy millions of this thing. If it's not a good company, it's not going to move. We saw companies like nutritional holdings. They sell below 1 rand, even below 50 cent. They just have a lot of announcement. The company is not really improving that much. They've got problems after problems after problems. They sell wheat, among other things. Now, there was a time where wheat stock were hot. People were rushing to wheat stock, but it seems like that hype for now is dead. That hype is not there. So now buying nutritional just because they've secured the license to provide weed and wara wara. I'm not saying that it's not going to work, but every day we are sitting in a dead company. There is a company that is living, that is appreciating in share price. Remember when Tungela listed, and then it kept on going up and up and up and up. Some investors had their capital tied in penny stocks. So you need to be careful when you buy penny stocks. Having said that, you also need to be careful when you buy big companies. Naspers and Process, big companies, one company, right? They have separated the two companies, but it's still the same one big company. Some of those companies, they no longer have a room for growth. While they can still provide services, remain profitable, pay dividends, they just struggle to break a ceiling. If you compare Naspers to Tesla, well, different countries, but Tesla in 2020 was able to grow from below $200 to over $700. You see, that company had the potential to grow. Right, companies like Zoom, they also did well, or DocuSign, but some of those companies, they're starting to fall. That's another thing. Penny stocks, why is it a penny stock? Large company, sometimes they can't just grow beyond where they are, which frustrates the investors because they start talking about the value is locked, the value is locked, the value is locked. Then there are those hot companies. Today, they crack, they bring a lot of money to investors. Some days, then they start falling. Another thing, you need to invest in a leading company. Let's look at EVs, electric cars. There's Tesla, there's NIO, there's Xpeng. Audi is also making its own electric cars. Mercedes, BMW. Okay, Toyota always had an electric car. They had that Toyota Prius, just that the design was not good looking. So now, if you are investing in the US, Tesla is a leader in electric cars. Why would I want to buy, let's say, for example, Xpeng over NIO? Because Tesla sells more cars than Xpeng. But remember, Xpeng and NIO, they're not US companies. They're based in Asia. They've got a different market. If you stop Tesla from selling Tesla in China, for example, China has large population. I don't want to say the biggest, but China has a large population. Now, if Tesla can't sell its cars, cannot sell its cars in China, it gives an opportunity for the Chinese EV manufacturers to sell more cars in China to grow their market shares. But if you had money, would you buy a Tesla? Is it a car that you love? Okay, it's a nice car, no problem with it. I'm a VW fan. If I see a VW GTI, Golf GTI, that is an EV, I'm more likely to buy the VW Golf GTI electric car compared to buying a Tesla. Like I said, there's nothing wrong with a Tesla, but I will choose a VW. So if all the other old manufacturers they catch up to Tesla, they start to reach that level, they can rapidly produce electric cars, they have charging stations, they can sell their EVs in other countries. They might, I'm not saying that they will, they might beat Tesla, but it's been a great run for Tesla. They didn't have a lot of competition for a while, which is what we want to see with companies. The reason I love Apple, people love Apple, they consider it to be premium stuff, so people will never stop. Well, I hope people will never stop buying Apple product. I myself, I plan to buy Apple product in the future. I do trade Apple. Let's see. Right, it doesn't make financial sense to buy an EV in South Africa right now. Yeah, man. Eskom always requesting electricity price hike. You don't want to pay a certain amount in January and also pay a higher amount in March and also an increase in July. But maybe if you can manage to get yourself off grid or even have enough solar panels to power up your EV, maybe it can compensate for that. You know, the USD South African Rand exchange is just working against us, man. We want to do some things, but the exchange rate is just working against us. So imagine if a Tesla, maybe Model S, let's say it cost 100,000 US dollars. That's about 1.6 million rands. So now we're going to pay import fees on that car, unless if they produce it, of which is less likely that they can produce it here in South Africa. But if there's a distribute, you end up paying 2 million rand for a Tesla. Hey guys, come on. There are cars that are worth 2 million rand, cars that have petrol engines, that have nice sounding engines. I'm not spending 2 million. Okay, besides that, I don't have 2 million, but I'm not spending 2 million on a quiet car when there's an engine that can really excite me. But yes, you make a valid point there. Our electricity at this moment, it's a mess. So maybe if we can fix that, or if we can have alternative energy that works well, We can use solar panels, they work scientifically. It's just that South Africa need consistent energy supply. We can't really focus a lot on some mini science project. We really need to produce electricity. Then once we reach the point where we have excess electricity, then we can start looking into alternative energies. But I mean, cars.co.za, they reviewed Tesla. There is a company, I forgot the name of the company that imported the Tesla. I think the name of the presenter for cars.co.za is Sierra. He did a review a Tesla, which was nice to see. People, depending where you are, some institutions they do have electric car. I mean, it's like a golf cart. Fine, a golf cart does not have a long range, but there are some companies that have had a Nissan Leaf for a while. They have charging stations, but some of those companies they also have alternative energies in their on their site. Either they're generating energy from solar or they have some wind turbines or any other. But yeah, it's really not something that will easily kick off. But remember, bruh, we have high inequality in this country. There are already rich guys that can afford to be off grid. They can afford to import Tesla and all those things. So, I mean, you go to Cape Town, we've seen some really nice cars in Cape Town. You go to Johannesburg or Sandton, we've seen nice cars in Sandton. Maybe those guys, for them, it make financial sense because they've got large amounts of money. But I'm not disagreeing with your point there. Okay, so what else? Blockchain. I don't know a lot about blockchain. When I look at crypto, when I'm looking at crypto or tokens, yes, there's a difference between a token and a coin. Yeah, when I'm looking at such things, I'm just looking at from a trader's perspective. I look at the chart. I may have an idea what it means to invest in Bitcoin, what Bitcoins is trying to achieve, which is just an alternative decentralized currency. That's what Bitcoin is trying to achieve. I understand Ethereum a bit, smart contract. I see opportunities that can come from smart contract. I see the use of Matic Polygon, which is also based on Ethereum blockchain. It solves some of the bottlenecks from Ethereum. What else? There are different kinds of tokens or coins. There's one called storage, which they use to repay people that provide the free hard drives on their devices so that other people can store their stuff in that cloud. So basically, what I'm trying to say, whenever I'm buying a token or a coin, I try to read the white paper of that particular coin. But obviously, before I even go to that white paper, I look at the chart. I use VALR to trade cryptocurrencies. So all I have on my watch list, I have all the cryptocurrencies that are found on VALR. Then if I see a bullish setup, because I don't trade crypto on leverage, I don't short sell crypto, I only buy. So if I get a buy signal from specific coin or token, then I do a bit of a desktop research there just to try and understand what does that token is trying to achieve, so that I can have an idea of what they are doing. Is there an application? Is the token inflationary or deflationary or something like that? But yeah, yeah, you can get a lot of information from different YouTube channels that touches on blockchain, which helps to understand. But one thing that I don't want to do, I don't want to buy a certain coin because now I understand what's trying to achieve, and then the price of that coin start to collapse. Then I keep on holding because I think, yeah, but this blockchain is going to solve one, two, three. No, when I get the sell signal, I just exit, irrespective of what I know about that company. All right, everyone that has been watching so far, depending on when you joined, if you haven't subscribed to the channel, please consider subscribing. If you found value in this session, please just give this video a like. We appreciate that. And you can share this video. Once we are done with this live session, then the video is always going to stay there on YouTube. You can share it with other people. For anyone that is still here, we still have about 5 minutes to go through questions. You can ask any questions besides the balance of my portfolio. So keep those questions coming. I will try to just focus on answering questions now. Okay, anyone? Is there anyone that has an eToro account? I know I joined eToro, I think in March 2021. After a while, there's some people that I spoke to, they couldn't join eToro. It seems like eToro is now not accepting, not rejecting. They are not accepting South African accounts. I don't know if it's something that has to do with regulations. But if you have an eToro account, if you go to any of these videos, you browse through the description, you will see a link that will take you to eToro. You can actually see my portfolio, what's on my eToro portfolio. It doesn't show you how much is invested, which is good, but it shows how much percentage that is allocated to that particular company. For example, I have about 30% on the Vanguard Total Index ETF, the VTI. It has a total expense ratio of 0.03%. Cheapest ETF, I'm not sure if there's even an ETF that beats that total expense ratio, but VTI has the lowest total expense ratio. I have about 30% of my capital allocated to that ETF. 30% of my capital is allocated to trading Apple. I'm not saying that I'm not a long-term investor of Apple, but excuse me, if the share price of Apple does a bit of a pullback, I exit when it starts to show signs that it's moving up, then I buy my shares there. So I started with the capital. I try to keep the balance on the invested capital on Apple to be 30%, but I also want to grow that amount just by trading Apple. And then the other 40% is allocated to different companies. I have Altria. Altria is a US company, tobacco stocks. We did a video where we were covering 4 tobacco stocks that can pay you dividends. So we covered British American Tobacco, Philip Morris, Altria. I forgot the fourth one. So cigarettes, people, I don't see people stopping smoking. We already see adverts, I think, from Philip Morris talking about people smoking e-cigarettes. Well, I don't know whether it's a fact or a myth that e-cigarette is less toxic compared to the typical cigarette that we used to. I won't comment on that, but I have a position on Altria as well. I have a position on OXY, Occidental Petroleum. So I'm bullish on energy. Well, for the past few weeks, I was bullish on energies because now the market, it looks extended. So we will see if the market is going to continue to move further high. It has a potential to continue to move high, but maybe in the short term, there might be a pullback. Another thing, if you see the share price going up, don't be the person that says, oh, this thing has went up, now it's supposed to fall. Dude or lady, the market does not listen to you. The market is just going to do what it wants to do. You cannot command the market to stop going up or to stop going lower. Yeah, so I'm bullish on energies, different energies. There's ExxonMobil, there's ConocoPhillips, yeah, a lot of energy companies in the US that are setting up nicely, but I have a position on OXY. I have a position on Anglo Gold Ashanti. I don't have Anglo Gold Ashanti in my EasyEquities account. South African Rand. I have Anglo Gold Ashanti on eToro. So the share code for Anglo Gold Ashanti there, I think it's AU. So that's where I have Anglo Gold Ashanti and some other companies that I don't really know the names. Remember, when I trade based on the chart, so I don't really need to know what that company does. As long as it's making money, I'm happy. You see, so yeah, you can see that portfolio there. We do have that dividend portfolio sessions that we normally do. We cover the portfolio. I think now we are sitting at about 67,000 rand from 49,000 rand. That is not just the growth there. Some companies were outside the dividend portfolio and we promoted them into the dividend portfolio. So that is how that value of that portfolio increased. So yeah, we have First Rand, Shoprite, Remgro, Pepco, Redefine. I forgot. Okay, recently I added Sasol. I'm still going to make a video saying why I made and added Sasol into that portfolio. But there are some other companies that I'll be promoting into that dividend portfolio. Basically, the dividend portfolio is companies that are on an uptrend, and most of those companies they pay dividends except Sasol. Sasol have had rough years in the past. They haven't been able to pay dividends, so they have a 0% dividend yield. But the other companies, they do pay dividends. So I think we're gonna wrap it up today. Thanks to everyone that pitched. I hope that everyone that had questions, I was able to answer all your questions. Then, okay, on the dividend manifesto, do you reinvest the dividends? Yes, everything that falls under everything that I classify as a dividend, I do not withdraw that dividend. I leave those dividends, which is tricky because now when you think of tax, you get the dividend, you pay 20% dividend withholding tax, you reinvest that money. Now, when you sell the shares that you bought with the dividends, you're going to trigger dividend tax. But yeah, I do not withdraw those. What I'm trying to achieve with the dividend portfolio, I want to see well, I'm not, the goal is not to generate dividend income per month. If it happens, great. If it doesn't happen, it's not a big deal. But I just want to see how much I can make as dividends in a year. For example, I received a tiny dividend in November. I think that was 49 Rand or even 29 Rand. Then in December, I received a fat dividend from Redefine. So by reinvesting, it could be two ways. I can reinvest the dividend back to the company that paid that dividend, or I can use that cash to add to another position that I already have, or use that cash to take another position. But I'm not withdrawing that cash so that it comes into my banking account. So yeah, that's what I mean by reinvesting. The goal is to see how much money I can make from dividends. If I mean we all start somewhere. If maybe I reach a point where I can generate 10,000 dividend income, maybe in 3 months, that means that in a year I can generate about 40,000 in income. Maybe I reach a point where I can generate consistently 2,500 dividends income per month. I just want to see how much dividend I'm getting if I'm buying dividend paying companies. I already have an idea how much I can grow my capital if I trade stocks. Like I said, the video is coming out tomorrow morning at 6. I didn't want to publish this video now because I didn't want it to interfere with this live session. But tomorrow it's coming. We made a reasonable amount of money. It's more than 50% that we made by trading stocks. So now I want to see how much money I can make from dividend income. But also those dividends are helpful because you don't always have money to deposit into your EasyEquities account. So if you receive a dividend, you can use that money to take some positions that you will have missed if you didn't receive dividends. So yeah, some companies they pay good dividends. Some companies they pay tiny dividends. It happens. Sometimes it feels like it's not worth it, but again, it's based on how much you invest in that company. So yeah, let's wrap it up here, ladies and gents. I saw a lot of comments from gents. I'm not sure if there was any lady that was joining us, but ladies and gentlemen, I appreciate your time that you have spent today to come and have this session. We will see each other again next week, Sunday. I hope I'm not planning to go anywhere. As long as I'm here at my place, we'll have the session next week. So thanks everyone. I'm going to cancel it now. Sharp.